If you check out the community tab of my channel, you'll see that I recently made a post detailing my partial sale of a stock after a big run-up. The company is called Peak Fintech Group, ticker symbol PKKFF, and it's a Chinese fintech company focused on connecting lenders and vendors. As you can imagine, there's a lot going on with that company right now, and I felt the goal of that post was pretty clear. I'm a long-term buy and hold investor, so I just don't sell stocks very often. That means when I do make a sale, I'm not exactly sure what I should be sharing with my community. That poses a challenge for me because now thousands of people watch my investment videos and dozens go above and beyond by supporting the channel financially as patrons on Patreon or channel members right here on YouTube. I don't like taking people's money for nothing, so to show my appreciation, I share my buys and sells with my biggest supporters right as they happen, instead of having them wait until I write, produce, and publish a video about it, if I even make one at all. That's a win-win, right? So in that post, I literally just shared everything. How much of the stock I hold, how much I'm selling, the things I'm concerned about, and even the ways I'm trying to improve. And trust me, there's a lot of room for improvement, so your feedback is always appreciated. Well, feedback is exactly what I got, and most of it was actually pretty helpful. And then there was this. Instead of selling tips, you should post your entire portfolio so we can see if you're a good investor or not. Anyone can post recommendations and boast about the ones that multi-bagged in a few months. We want to see if you have skin in the game. If you're going to be peddling your services for profit, then you need to be fully transparent by revealing your entire portfolio. Here's what I say to that. Cool. Challenge accepted. Based on that comment, there will be 3 parts to this episode, showing you that I have skin in the game today, revealing my trading history since before I even thought about starting this channel, and assessing my 5-year performance. No justifications, just data. That way you can decide if I'm a good investor or not. Timestamps are enabled for your convenience, and if you stick around to the end of the episode, I'll show you my future investing plans as well. Full transparency, right? Let's start with my skin in the game. Here's a high-level overview of my 3 investment accounts and my unrealized gains. I'll show you my realized gains as well, but this is a good place to start. I'm not a financial advisor, and nothing in this episode is a recommendation to buy or sell any stock or fund. Since I'm not a financial advisor, I pay for one. His name is Mark, and I know he watches this channel. Hi, Mark. Mark is hugely responsible for my basic financial literacy, as well as my understanding of financial risk. Thanks, Mark. Let me show you my ARK Invest positions right up front so there's no confusion. Since I can't control ARK Invest share prices yet, let's go by my cost basis. I've bought over $35,000 worth of ARKG, $47,000 worth of ARKK, and over $27,000 of ARKW between this retirement account and my Roth IRA, which I recently began managing myself. So, I currently have over $110,000 invested in ARK Invest's funds today. When Cathie Wood's funds rally, I really do celebrate alongside you, and when they dip, I really do also feel your pain. If you include the individual stocks I hold directly because of ARK Invest's research that I build on top of and share with you, I have another almost $40,000 in Teladoc, $10,000 in Ginkgo Bioworks, $5,000 in Skills, and one remaining share of Tesla at a cost basis of exactly $420.69. Nice. If you add up my entire personal cost basis of ARK Invest's funds and their individual holdings, I've put exactly $171,884.11 where my mouth is. Let me know in the comments below if that's enough skin in the game. Here are all my current holdings with Mark in my main retirement account. About $88,000 in ARK Invest, $28,000 in Teladoc, $20,000 in NEO, and $25,000 in 3D Capital, ticker symbol IDKFF. 3D Capital is a Canadian conglomerate that focuses on buying into companies kind of like Berkshire Hathaway does, but focuses on small cap, disruptive innovation companies kind of like how ARK Invest does. This is a retirement account, so it's filled with very long-term plays. All of these other indexes and funds are in here so that Mark doesn't literally strangle me. Here are my realized gains and losses, meaning the positions that either he or I have sold since the start of the year. Virgin Galactic and Slack are the 2 that I was responsible for, and the rest of these gains are actually because Mark is really good at his job. Almost. As you can see, he lost me $350 on a couple trades earlier this year. He's on thin ice. Since we transferred my account into this platform 2 years ago, my cost basis for this account at the time was $183,500, and the current value, including these realized gains, is $251,800, which is a 37% return over about 2 years, or 17% annually. Not bad for how conservative and long-term it is. Fidelity is where I manage the other 2 accounts. If you don't know anything about Roth IRAs, they allow for tax-free growth and tax-free withdrawals in retirement, but limit contributions to $5,500 or so per year. Maybe the limit is like $6,000 a year now. Here's what's in that account. Again, IDKFF is 3D Capital, and PKKFF is Peak Fintech Group. Skills, Ginkgo Bioworks, ARKW, and Teladoc are all here as well, and they're currently at a great discount compared to the prices that I bought them at. I started this Roth IRA in 2014 and haven't added cash to it since 2019 because I'm no longer eligible. That's a problem I'm very fortunate to have. During those 6 years, I always contributed the maximum, so my cost basis for this account is around $33,000, and it's now worth $113,000, so that's a compound annual growth rate of at least 19% over the last 7 years, which is right in line with the S&P 500 over the same time frame, even with my latest trades into these positions being down by double-digit percentage points today. My only regret with this account is that I can't contribute to it anymore, and I can't withdraw from it for another almost 30 years. Here's my actively managed individual investing account. Managing this account has been my full-time job since May. It currently has around $350,000 in it, up from about $110,000 this time last year. That's a 227% annualized rate of return compared to the 31% the S&P 500 returned over the same time frame. I'll save the rest of the performance commentary for after I show you what's in here. There's obviously no ARK Invest in my active account, since that would defeat the point of actively trading myself. As you can see, it's mostly the same stuff. Peak Fintech, 3D Capital, and Ginkgo Bioworks are all slotted in here again. Then there are a few companies that my insider tier patrons on Patreon and channel members right here on YouTube recognize from my buy alerts. Big Digital Assets, ticker symbol BBKCF, is a company that focuses on compliance and security for cryptocurrencies that I'm currently averaging down into since it crashed along with the crypto market earlier this year. Red, White, and Bloom, ticker symbol RWBYF, is a multi-state cannabis company that makes smart acquisitions and is trading at much lower earnings multiples than companies like Trulieve and Curaleaf. CleanSpark, ticker symbol CLSK, is an energy management company that helps their clients set up microgrids that smartly produce, route, store, and consume power based on whatever they need to achieve. For example, a hospital campus with multiple buildings might need 100% uptime for their electricity, while a low-income neighborhood might optimize their combined power consumption around peak loads to sell energy back to the grid for the highest price instead of consuming it. CleanSpark also makes smart acquisitions, including a couple smart crypto mining data centers that they're optimizing the power consumption of. Solar Integrated Roofing Corp, ticker symbol SIRC, is a Tesla-certified solar installation platform company that again makes smart acquisitions to expand into adjacent markets, like battery backups and electric vehicle charging stations. I feel that Solar Integrated Roofing Corp trades at very low earnings multiples compared to other solar companies. As you can tell, I have an affinity for active portfolios that constantly add new innovative companies, as well as innovative companies that are actively making smart acquisitions, both of which I talk about very often in my videos. Think Teladoc's merger with Livongo, Palantir's investments in over a dozen SPACs, Skill's acquisition of ARKG, and all the other acquisitions that I focus on when I talk about earnings. The reason for that is because these types of portfolios and companies act as gateways for me to find cool technology trends and themes to research, and that's what I'm passionate about. Speaking of cool technology, Tesla was in my portfolio for a long time, and I will always keep this one share at the perfect cost basis. I got rid of my Tesla position in this account because I think it's a much longer term play at this point, and remember, I still hold a ton of it through my sizable positions in ARKK and ARKW. Just like with my retirement accounts, here are my realized gains and losses from my own active trading, meaning money I've made and lost from every single stock I've sold since the start of third quarter 2020, which is when I first had the idea to build ticker symbol U. This list of trades just gets too long if I show you everything over the last 5 years. My academic and professional background is in electrical engineering and artificial intelligence, which I lean on heavily in my personal investing as well as in these videos. Surprise, surprise, my biggest winners are all in the energy space, which I talk about extensively. SIRC 15x'd from when I bought it, so I cashed out and bought back in at the prices that I just showed you in my current portfolio. I've also roughly 2 to 4x'd my money 4 other times in the last 5 quarters, thanks to companies like CleanSpark, Marathon Holdings, Planet 13, and Peak Fintech. Moving down the list a bit, you can see that I actually held another roughly $75,000 of ARK Invest in the past. So at one point, I held over $250,000 in Cathie Wood's funds and her biggest positions before I decided to take a more active role in my own investing. Just for full transparency, here are all of my losses for the same time period, all of which were sold for pretty different reasons. Teladoc is actually my biggest loss, which I still hold a ton of and regret selling at all. I'm still averaging down into it today, and this sale was just a silly mistake. Helion, ticker symbol HYLN, is a company that makes hybrid natural gas generator and electric motor systems that can be retrofitted to existing semi-trucks. They have a lot of sweet ideas, but at the time I didn't really see them executing, so I bailed. And BrainChip, ticker symbol BRCHF, is a company that makes small, lightweight computer chips that crunch numbers the same way the human brain does, instead of how other neural networks crunch them. I like the company a lot, and I only sold because I'm trying to get out of the OTC market specifically, and exiting BrainChip meant paying the least amount of taxes at the time. If they get uplisted to a major exchange, I'll think about buying back in. That's actually the same reason for a lot of these trades, where the total proceeds and the cost basis are close to the same amount. I've been heavily consolidating my positions and wanted to pay as little taxes as possible. I'll explain why after I show you my historical performance. If we go to the Performance tab for my account, you can see my performance for the last year. This 227% number is my time-weighted annualized rate of return for the past year. Time-weighted is actually the wrong way to look at it, which I'll talk about more in a minute. If we go down to my balance and performance activity, you can see my portfolio value over the last year in dark blue versus my cost basis in light blue. My cost basis is negative because I took about $150,000 out as a safety net before becoming a full-time investor and YouTuber earlier this year, since that's pretty much as far from a stable paycheck as you can get. Right after I went full-time in May, ARK Invest's funds tanked, and so did my channel's views for about 2 months, so taking these profits turned out to be a seriously prudent move for me. The only income I actually had for those 2 months came from Patreon, which is why I'm always hemming and hawing about providing my supporters with enough value to begin with. There was a point where they literally would have kept food on my table if I didn't take these profits, and that really matters to me. Let's take a closer look at my personal returns. This data is since I opened my investment account on August 18th, 2016, so just over 5 years ago. It's pretty cool for me to finally be able to see this 5-year number. Below it, we can compare my annualized returns to the S&P 500, the Dow Jones, and other big indexes. Here's the thing. These are time-weighted returns, which means they don't take into account big deposits and withdrawals. That way you can compare the performance of my investments directly to an index. Before I show you my true money-weighted returns, let me explain the difference. I'm not trying to justify anything here. This is an important nuance. Time weighting looks at the change in portfolio value over time. Time weighting is important for fund managers like Cathie Wood because she doesn't control the massive inflows and outflows of ARK Invest's funds. Her investors do, so counting her fund flows one way or the other when comparing the performance of her investments to an index wouldn't be apples to apples. If you've ever seen a YouTuber use M1 Finance, that app shows you your money-weighted returns. As the name implies, money weighting weighs your performance more when your portfolio is bigger and less when your portfolio is smaller, meaning it takes into account the timing of your deposits and withdrawals as an investor. This is how we as individuals should measure our performance, since we control our deposits and withdrawals. So time-weighted performance is for investments, and money-weighted performance is for investors. So here is my true personal annualized rate of return as an investor. To you, it's just a table verifying what I hope you already suspected based on the time, money, and energy I pour into this channel. But to me, it's a half-decade of sweat, all my attempts to time the market, all my swing trades gone wrong, and serious lessons learned from bad mistakes. I held Tesla and Nvidia years ago and let them both go way too early. I've held plenty of bad stocks way too late. Even though these numbers look great, I feel like I have so much left to learn about business and finance, about technology and innovation, and about how they all come together inside the publicly traded companies that are transforming our lives. That's what I'm genuinely excited to share with you each episode, regardless of whether it's a green day or a red day. All right. Hopefully I've satisfied you with my skin in the game, my recent trading history, and my long-term performance. Let me know in the comments below if this is what you want from my portfolio reveals or if there's something else I should do for next time. And there will be a next time because this is just a snapshot and my portfolio is always changing over time. Okay, here's what's happening next. As I just showed you, I've been consolidating my portfolio for a while now. If and when ticker symbol U hits 100,000 subscribers, I'm going to open a $100,000 portfolio and show you how I would invest it from scratch and manage it over time. And over time, I want that portfolio to become my main portfolio. Just like this one, the portfolio will have some companies that are from ARK Invest's funds, and it will have some that are not. Instead of comparing the ticker symbol U portfolio to the indexes, we're going to compare its performance to Cathie Wood and ARKK over a 5-year stretch, since that's ARK Invest's time horizon, or however long it takes for me to admit defeat. ARK Invest has a team of incredible analysts and all the financial tools and resources that Cathie Wood could ever want. So, I'll be reorganizing my 4,000 member Discord community to focus more on the stock market and investing, not just technology platforms and innovation. If you're interested in joining that and helping me with this crazy idea, I'll leave a link to my Discord community in the description below. I strongly believe that almost nobody understands technology and exponential growth like Cathie Wood does, so no matter what the results are, I want to make it clear that the goal of this portfolio is to provide a fun, interactive, and educational investment experience using my own money. To me, that's a great way to level up the channel that invests in you. If you're interested in seeing the moves in that portfolio as they happen, instead of waiting for me to cover it in a video, consider becoming a patron on Patreon or a channel member right here on YouTube. For the hundreds of people that are already supporting the channel through those two platforms, first of all, thank you. The channel is still less than 1 year old, and many of you have been with me for 6, 7, or even 8 months now, and that means the world to me. Seriously. If you're not a supporter and you still want to follow the portfolio when it launches, that's totally cool. I'll talk about the portfolio at least once a month and recap the biggest changes, good or bad. Ultimately, I believe that investing is a set of practiced skills. However you decide to invest in those skills is up to you. Until next time, this is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.